Well, home prices bounced back this week, and looking at that in the context of inventory levels and sale-to-list ratio, I think we may have bottomed out for the year in terms of pricing and may be headed toward a pricier fall and winter. Welcome to the Los Angeles Real Estate Roundup for September 9th, 2024. I'm John Schwartz, a realtor with House Hack Los Angeles, a boutique agency that uses data and smarter home buying strategies to make sure your next home purchase is the best investment of your life. Learn more and sign up for my weekly newsletter, which includes my favorite home finds of the week at www.househack.la. Did it just get darker in here? Now let's take a look at our Los Angeles numbers. All right, we're looking at the latest weekly print from Redfin for the Los Angeles metro market. As you can see, this week we bounced back a bit. We had a recent low price last week of $899,000 for a median home in Los Angeles. That's jumped up to $905,000 for a median priced home in Los Angeles. That follows 6 weeks of decline. Now, the question, of course, is what's this line going to look like for the rest of the year? And interestingly, we don't really have any good examples from the previous 3 years. So last year, 2023, had this unusual price hump late in the year. This is what, November, October, November. This is usually when prices are declining. The year before that, 2022, was when we had this wild rate increase that really drove prices down in the second half of the year. And prices generally do descend after the summer season ends, but not to this extent. And then finally, 2021, let me get rid of my doodles. 2021 was when prices really, really surged, and we just kind of saw this constant growth all year. Now, there was a little bit of seasonality as the fall began, but by the end of the year, there was already a lot of news out that rates were going to start climbing soon, and that's what drove prices up right at the end of the year. So is 2024 going to be kind of normalish and prices are going to fall off as the year continues? Or are we going to have a weird repeat like we've had in the last couple of years? Let's look at some more data to try to figure that out. Now we're looking at new listing median price. This is the median price at which a new listing is brought to market in Los Angeles. We fell again last week to a price of $914,625. This is the lowest new listing median price we've seen since back in March. Now, this would suggest that realtors are really feeling the squeeze after the 6 weeks of price drops they just experienced. But when we look at inventory, we get the impression that maybe realtors are overreacting. We're looking at new listings. New listings are down from last week in both absolute and year-over-year numbers. This week we were at 1,302 new listings. That's 12% year-over-year. Last week we were up at 1,386 new listings, or 13.7% growth year-over-year. And I want you to notice the year-over-year numbers are going to start to suffer because last year, the blue line, we had this inventory hump toward the end of the year. So we'll keep an eye on that moving forward. Homes sold climbed this week, both in absolute and year-over-year numbers. This week we sold 1,048 homes in Los Angeles. That's 2.7% growth over last year. Whereas last week we were at 1,017, just 0.6% growth over last year. Of course, watchers of the Los Angeles Real Estate Roundup knew this was coming because pending sales began to show growth over last year about 5 weeks ago. And we know pending sales is a leading indicator of home sales. A home goes pending about 4 or 5 weeks before it becomes sold, because that's how long the escrow process is. However, pending sales is now beginning to trend back toward last year's numbers. So we know that this growth in home sales that we saw this week is going to be a couple week-long blip and then return to last year's numbers. And total active listings has continued its couple week-long decline. This week, the LA market saw a total of 15,534 active listings, 23% over last year. Last week, we were at 15,745, a little more than 24% over last year. Now, you'll notice this peak in active inventory is a little earlier than what we've seen in previous years. Obviously, last year had this big bump at the end of the year. And with this kind of being the average, I would expect that the peak we saw this year is our peak for the year, and this number is going to continue to slide down for the rest of the year. And to bolster this argument that inventory should be giving realtors relief, as opposed to the last couple of weeks of price declines giving realtors agita, we have weeks of supply, which actually fell this week. It's hard to see because this year's line is right on top of, or actually right under 2022's line, but we're at 15.1 weeks of supply on the market this week, down from last week's 15.6. Now, we're going to need to see this number get up to 17 weeks of supply on the market in order to see the seasonal price declines that we hope we're going to see as we head into the fall. Month supply is, I think, the most important metric to keep your eye on this fall to have an indication of where prices are headed. Keep your eye on month supply by keeping your eye on the Los Angeles Real Estate Roundup. Subscribe for more videos like this one.